Good afternoon, everybody. Welcome to the Trader Merlin Show. It is your Thursday edition. We finally got our little bit of a reversal, which I'm sure we will talk about today. Some lovely downside moves. But I thought we would start off by welcoming our guest who's been on the program many times. And when he's on the program, he likes to look at things. Well, it depends on what the show topic is. But a lot of times it's looking at the long-term picture, kind of implying a little bit of a Warren Buffett methodology, Warren Graham methodology, applying a little bit of the Online Trading Academy supply and demand methodology, some fundamentals that he does on his own, mixing it all together and coming up with the Dr. Larry Jacobson perspective on long-term investments. And we've had quite a few. I see Big Eb talking about Larry suggesting netties some time ago. I'm up 31% since then. Well, thank you, Larry, for that one. We're actually going to look at that one. Because I was going back through some of the old shows and reviewing that as well. Larry might talk about some of his new ideas as well. So here is our graphic for today. I called it the mid-year trade review with Larry Jacobson, just kind of to see where he stands with some of the securities that he's currently holding and what his thoughts are and maybe what are some of the new stuff out there. So Dr. Larry Jacobson, there you are. How you doing, my friend?
I'm great, Merlin. How you doing? Good to be back on the show. I know it's been way too long, but at least I try to come on right around the new year, and I try to come on mid-year at least.
At least.
So we can do some shows. I'm going to try to get on more, but everything's going on.
Duty calls. It will definitely, you're a busy man. I appreciate when we get you on when we can. What's new in your world since you said you've been really busy? What have you been working on?
I've just been working on new course ideas. I'm really excited. I'm going to introduce a new focus class that I spent some time working on. You know the gentleman, Mr. Bill Addis, so I'm excited. That one's releasing in September.
Woohoo!
And your class has just come out. We did a great showcase, this past Monday. There's still, by the way, time for people who are interested in getting your course. We're actually offering 25% discount until 5:30 today. So if you've wanted to be alongside Merlin for more than just Trader Merlin, this is a chance for many of you to do that. So other than that, teaching a lot and just doing a lot of online stuff lately.
Awesome. Well, I share your enthusiasm for creating new content. Larry's always got new strategies and tactics he's implementing, which is one of my favorite things about you. You always have some oven in the fire, kind of going through new strategies. And who knows, maybe we'll see more of these strategies rolled out. But love that you keep on learning and educating.
Absolutely. You too. It's fun.
It is. It makes it worthwhile for me. Let's start off by doing a quick little review. As Big Eb started off at the very beginning, you've been on the program several times, and usually when you come on, you profile one company, say, all right, let's look at things from a fundamental perspective, and then we'll look at the technicals and see, is this really an undervalued security or not? So I was trying to find information, going back through some of the shows, and I actually found some recordings. I'm going to put you on the spot here today, of NetEase. I didn't have time to go through and look at others, but I don't know if you want me to start, should I play a little bit of this one?
Yeah, hold on for a second. What I want to do, because you just opened the door, and then we'll get to that, is I'm going to share my screen if that's okay.
Yeah, please.
Let me go ahead and do that real quickly. Let me know if you can see my screen. Let me get out of this. There we go.
Yep.
Let me get you out of the way here. All right, perfect. So what I want to share with the audience today is, how did this all begin? So right now, can you see the Nvidia chart? This is where you and I started. Look at the date, Merlin. We're going back to Thanksgiving of 2015. So this is almost going on, 8 years already.
Yeah, crazy.
And it started because, like you said, there was this love I always had about the way that Buffett approached the markets. And I got the opportunity through a mutual friend to be able to go to Atlanta, go down and learn from somebody who learned from somebody who learned from Buffett. I know that sounds funky, but when you get an opportunity like that to be able to sit across somebody who can answer questions for you, it's invaluable.
Yeah.
And so that's what I did. I spent 3 days in Atlanta, and I came back all excited, and we were on Power Trading Radio. And I said, I want to try something new with you. And you and I have kind of been doing this now for 8 years. It wasn't just kind of fly by night. It became kind of a passion for me. And I know you've been very involved, and every week I send you the outcomes. But how this all started for me was hearing a news event from the chairman of Nvidia. And at that time in 2015, what caught my attention was that he said, we want to be the premier chip maker for driverless cars. And having just spent this time with this gentleman in Atlanta and understanding that Warren Buffett's first tenet is, I want to find companies that will be relevant, not today, maybe not even a year from now, but will be relevant in 5 to 10 years from now. And here we have somebody making a statement in the sand. And here we are 8 years later. And I know you've been really hyped up on Tesla and the fact they now have an autonomous driving car and everything. So this actually has been coming to fruition, taking about 10 years to happen, but we're here. But the point I'm trying to make is there are going to be these opportunities in time where the markets can even be overbought. There can be a lot going on. And what I've really learned in studying Buffett and Ben Graham is that sometimes the stock is broken, but not the company. And so if you look here, and this is the price it was trading at $31.39 a share back on November 27, 2015. Now, what I'm going to show you next is a big jump in price 3 years later. Now, there's a very specific reason why I'm focusing on January 19, 2018 specifically, which would be there at this point 3 years later, is that I want to explain two different ways that you can approach this strategy. One is, had I just put on the trade itself, we can see here that it actually jumped, right? Jumped up to $230.11 per share by this January date, which means it went up 633%. Now, what you involved me in, which wasn't even on my radar at the time, was I remember you saying you didn't even know what you did. Nvidia became the premier chip for mining cryptocurrency. Right. And now it's become the premier chip for gaming. And now it's becoming a premier chip for AI. So this company has always been innovating. But my point of using this data is I just want to kind of show the listeners here. Let's presume that you bought 100 shares back in November of 2015. It would have cost you about $3,100. So these are these moments in time where you have to ask yourselves two questions. One, do you see the value in this company? And if you can't do it on your own, get educated so you can really see these opportunities as they're unfolding. And so if you had bought that stock, 100 shares back in 15, and sold it like I just showed you in 18, it would have made 633%. Now, what if you had done 1,000 shares, right? It cost you about $31,000, and you would have walked away with $167,000. But then I start to realize there's a group of people out there that may not be comfortable wanting to put on that kind of a trade initially. Maybe they don't have the money to do so, but I don't want to see people miss opportunities. So I go to my other hat, which you know I'm very passionate about, which is option trading. And that's why I use this date, because what I'm showing you is factual information that was on that date and time. So notice the option chain is from November 27, 2015, and the option itself, the same one contract, the equivalent of 100 shares, could have been bought for the January 18th expiration. So it could have been traded as a leap, even though we're back in 2015. Now, you would have paid $695 to control the same 100 shares that would have cost about $3,000. So you can see down here, the ask price at the time was $695. Now, notice what the option did. Okay, the same move that happened on the stock that took us, okay, from $31.39 to $230, jumped from $695 to $199.95. That is a huge increase, okay, in price movement. So what I started to say is, what if you had done the stock or you'd done the option? Look at the difference when you look at the P&L rate of return, having done the option and been in it for about 3 years. You would have made over 2,500% on the stock. And I remember very clearly you saying to me, are you going to sell it? Are you going to sell it? Are you going to sell it? And I kept saying to you, no, this is a long-term play for me. This is not going to be the typical trading that we do. And so the 1,000 shares, and look at this one, 10 contracts, the equivalent of controlling 1,000 shares, would have been about 7,000 as opposed to 31,000, and you would have made about 193,000. So not too bad, $200,000, right? The difference obviously between the two in a matter of 3 years. So again, what I want to show everybody is this is what it looked like on that day. Now, by the way, the valuation at that time, the stock should have been trading at around $99 a share. So right off the bat, we
Well,
can
you say
see.
you hold on. Let me correct that. You said the
Yep,
stock should have been trading at $99 per share. Based off your calculations, the stock should have been trading at $99 per share because I know at the time there were analysts that said this thing should be trading at $20 or analysts saying it should be trading at 10. So based off your analysis, $99
correct.
was one. Okay, just
Well,
making sure.
the value investing way
Right.
would it be that using fundamentals, understanding where the company was. See, a lot of analysts may or may not know and do the same type of things. They're saying 20, but let's really see how this played out. So again, $31 going back to 15. Here we are today right now. So the split adjusted entry price back in 2015, adjusted for the split 4-to-1 right now, you would have paid about $8 a share. Right now, it's around $450 a share. And if we look at it, not adjusting for split, the stock that you would have bought for $31 would be worth $1,821 a share today. And if you look at this chart, you don't see a much nicer uptrend on this right now.
Well, I gotta say, it is an uptrend, but I hate that pullback from 2021 to 2022. I mean, that would have flushed me out for sure. I think vast majority of people here, it would have gone from over $340 down to about $100. I'm out. I got a trail stop on that bad boy. I'm out.
So here's the deal, though. Thinking like a long-term investor, why would I jump out at 100 if I really liked it down here? Why wouldn't I bought it at demand and wrote it up? Because again, you paid $7.85 a share. See, this is the difference that Warren Buffett figured out early on. If it's a great company, undervalued for where it should have been at the time of purchase. Right now, unless Nvidia does something really toxic to themselves, even with corrections like we saw coming down even this year, did not in any way impede upon the fact I wouldn't have a profit. It's almost the same if you think about the fact that when you bought your first crypto Bitcoin, and now you're looking at it, and I always tell people, well, when Merlin was first buying it at $300 a coin, he wasn't stressing when it dropped down to 17,000. Yes, you lost unrealized profit, but again, you're in it for the long term. Same thing with certain stocks. I'm in this for the long term. I think Nvidia is going to do great.
And again, this all boils down to you having taken the time to look through it and analyzing all the numbers and saying, okay, fine. I think, to be fair, I think that you were what you did here with this Nvidia trade to me is like you ordered the best meal that you could find on the menu, best bang for your buck. And as you were finishing that meal, like it got towards your target, because I initially believe you told me your target was $350 on this one pre-split, which means that was like a $90-something price target. You know, that to me is the end of the meal, if you will. That was your target, should have gotten out. But you were given, in this case, I'm using a meal as an example, they kept bringing out more lobster and more prime rib because, again, you bought it because of the AI interview for driverless cars. That was your major. So I remember you were like, man, driverless cars, the future. And I agreed with you. And then you had the bonus of NVIDIA chips being totally just bought off the shelves like crazy because of cryptocurrency. Now, that currency tapered off a little bit, but then all of a sudden you had, it's the best chip for gaming. And then now the mother load is the best chip for AI. So you can have these extra bonuses added on that you were not believe or knowing were going to be there at that point in time. How do you adjust that price target that you had initially based off that?
Same thing. Every time I can come back and reevaluate the company and decide whether or not I think there's still potential for future value growth, which I think there is for this company right now. Or I decide right now it's run its course. I don't think there's going to be something there. And when I see a real reason to sell, not a pullback of a stock, but we're going into a correction or a major market crash, then the decision becomes, do I really want to sell it or do I want to buy puts to protect it? Right. Do I really love this stock? Do I want to continue to be an owner of this company? That's my decision here. Do I like the management? Do I think it's got a strong economic moat? Is it a good company based on its fundamentals? And the answer to me was yes, yes, and yes. So right now, I think the CEO is incredibly innovative. He's visionary. He's always pushing to try to do new things. And for whatever reason, Nvidia has been leading the charge in this sector for quite some time. And like you would say, I want to continue to put my money on the best horse of the pack.
Absolutely.
At this point. So now I think it's good, just so everyone who may be coming in understands how we started to get into this. And after I started to just continue to do this and I find things, and this one was another great opportunity. So if you want to play the video, then I'll just lead it in here by saying this was the kind of template for the show. You want to go ahead and play it, then I'll come back and we'll kind of take a look at how NTEST did.
Well, I'll just show it. It's not really the full video, but I was just kind of trying to edit out the parts, but I didn't quite get to it. But, this is back from December 22nd when he was going over NetEase and kind of going through the whole profile. I don't even know if you won't be able to hear it. Unfortunately, can't hear the audio, but, he goes on to talk about NTEST, and then later on, you go through all the different reasons, the financials, some of the fundamental pieces why, and then you went through some technical analysis. And at the time, NTEST was at $78.18 when you were doing that show. And walk us through what's happened since December of last year to where we are today.
Okay, so back on screen right now, my share.
Yeah,
okay.
Here you are.
Okay, so here we were, right? And we can see it right now, and this is where we are today. What I really loved was this big drop into this demand area. That's what really caught my eye. And so when I saw it here and I got into this, I realized there's a chance for this to still rally. So there's been a nice rally right now in this stock as anticipated because of the fact that when I analyzed it, it looked to me like it was in a great valuation for where it should be right now. And so it's important to remember that I'm in this for the long haul. Now, we are starting to run into areas of supply. So this becomes a decision. Do you believe in it and continue it? Do we buy puts when we start to get up here? Do I want to take money off and buy it back on a pullback? These are more trader investor type of questions, or do you just let it ride and understand that based on where you bought it, do we really believe price is going to get down? Mm-hmm. And so what I want to share, and this is, I'm going to be very honest with everybody, is for educational purposes only. So Merlin and I have been doing a kind of tracking all these years, and I've got the latest as of last Friday. So this is the portfolio. You can see all the different things. Some of the Merlin we did on Power Trading Radio on the early days. Others I've been coming on the show. And right now, there's two things I want to draw everybody's attention to. One, we have an 80% winning ratio. Why? Because of the discounted effect of learning how to analyze a stock and make the right decision about when it's time to get in. The second thing is...
Hold on, let me add to that. Let me add to that real quick.
Sure.
The other part to this, you notice the timeline on this goes back to 2015 and the most recent up to 2023. I think another factor to this as to why you have a higher success rate is if you're a buy and hold investor, markets are built and designed to go up over time. Architecturally, we can spend time explaining that if you want in another lesson, or another show, but they're literally built to go up over time. So in theory, the longer you hold something, more likely you'll turn a profit at some point in time. Now, that said, with a giant asterisk that doesn't mean buy anything. I had a gentleman on the show the other day this repeatedly comes on the program, and he keeps asking me to check out these really shitty penny stocks that you shouldn't even buy with borrowed money. I mean, no money. They're garbage. They're junk. They're scams.
Yes.
But if you notice all these companies, a lot of them are somewhat household names that have staying power, that have longevity. And I think what's unique here and why Larry Buffett, and I like Naum given he's calling you Larry Warren Buffett, he's utilizing that approach of, if I'm going to hold something for the long haul, I want it to be a good, solid company, but I also want to buy it when I deem it to be relatively discounted. And again, Larry has his own way of looking at fundamentals, etc. But when you look and say, I'm going to buy it on a pullback, that's one thing. But to buy it at a pullback price that is still overpriced is not smart. To buy it on a pullback at a price that's very undervalued, now all of a sudden your prognosis or probability of long-term price appreciation goes up because you're buying a good company. You know it's most likely going to come back over time, and therefore you got a high win percentage. I mean, 79 is pretty good.
Yeah, absolutely. And also it's important to understand that if you're going to take this type of approach, you have to be willing to hold these companies for at least 3 years because it needs time for the price of the stock to catch up to the fundamentals. So notice recently, a lot of tech in 2022 started to become discounted. And there was a moment, I remember you and I talking about it, Merlin, when I said I was getting into Amazon now and Google, because they finally had a valuation that made sense. And as a result, most of them are in double digits right now. The really older ones, we've got triple digits, and some we've got in quadruple digit profits. So when I hear people tell me all the time, it can't be done, and it really hit me when I heard Charlie Munger. I know he's your favorite, Merlin, but when I heard Charlie Munger make a very astute observation about Berkshire Hathaway, and he was he's been recorded saying that, we're nearly not that great. If Warren and I hadn't found these 5 or 6 really dynamite stocks, we'd be average investors. So he acknowledges the fact what made Buffett and Munger unique is they had the ability to find great companies. They either bought them or heavily invested in it when they had the ability to join boards or be able to have kind of more voting stock. But they also believed in the business. They believed it was going to be around for a while. And so back when, which is funny, not haha, but interesting, things like Nvidia. I mean, look at Activision. You and I were talking about Activision in 2017, and now we're up over 100%. Shopify, TTD, Trading Desk, which you gave me a lot of guff for.
Hey, could you just no, I don't care about the trade desk. There's 2 on here. You need to sell them just to make me feel better, or you're not welcome back on the show again. That's Live Nation and Skyworks. Live Nation, because I think Ticketmaster is the worst organization on the planet. I hate Ticketmaster. It's a scam. It's a con. That thing should be shut down immediately. And then Skyworks is just because I sold it at a ridiculous price, like $3, and then it just went absolutely ballistic. So that's a sore subject for me, SWKS.
But you know what? You had the opportunity, but you decided not to do it. See, I'm kind of agnostic here. It's like, you know what? I am an investor. If I invest in the company right now, it's good. I mean, look at Meta. A lot of people gave up on this stock. We didn't. We kept it going, and now it's up 76% back in 2018. So
Hold on, let me show them here. You guys, here's the chart. I'll show you the date that I sold my Skyworks. Oh, God, this is going to hurt. Let's see. Right here in February of 2009, I sold my Skyworks, and it was trading at a low of $4.25, and it rallied all the way up to 200. And I had several thousand shares of that bad boy. I was going to keep it for the long haul. But I bought a home with it, which is fine. But
the 3 best traders in the world, Merlin, would have, could have, should have.
Damn it.
So at this point, what's really fun here is it just gives me an opportunity to kind of test things out. So here we are on December 20th. So that means we went on the show 2 days later after I kind of found this at $68.90. It's already up 53% since we talked about it.
Nice.
And I'm glad one of the listeners, saw the value in it. But again, I'm not trying to make any recommendations here. I'm not trying to sell you on anything. I'm just showing you the potential and the opportunity here in being able to understand that learning value investing is a strategy that might be able to help some of you who don't really want to be in front of your computer every single day. And one thing you and I talked about, Merlin, was even during 2022, when the markets were really tanking, this portfolio held up pretty well. Yeah. It didn't tend to fall the way that the typical stocks that most people traded.
Again, you've got a very diversified portfolio of some pretty solid companies there. Let me ask you, so you've got a few in there in yellow that are the ones that are currently down at the moment. And I look at something like HQY, which you bought in 2019. Here we are 4 years later, and it still has not done what you thought it was going to do. At what point do you say, all right, I'm done. I was going to hold this for a certain period of time. Clearly, it hasn't done what I thought it was going to do. Maybe the metrics have changed. When do you go back through and cut those losers loose?
It depends upon what I still continue to do is read, see what's going on, looking at the trends. For example, some of them are down a lot more. They're starting to rebound a little bit. So some might take longer than others to come back. And also, I think really in the last 2 years, since then, I've even redefined my own filters and rules. So I've started in 2022, with the exception once we came out of here, iRobot, I wish it'd be doing a little bit better. Maybe just got into the whole Roomba thing. But I started to see these companies that I've been picking seem to have had much better opportunities. Now, the one that I love here, and I'm bummed that I did not do earlier, somebody talked me out of it many years ago, and I gave up that practice, was Lululemon. Back when I first started learning about it was around the time of 2015. The stock was worth $60 a share.
Yeah.
That would have been a great one to have in the portfolio. But when I told you about it in March, I said, look, I think this one has legs, and it's already up 30%. Now, again, we've had a nice rally, and we could be coming back into supply in the markets and see sell-offs. But what I have found is good companies don't tend to sell off the same way that more speculative growth companies do, because everybody's trying to go for that magic bullet. Here, it's kind of slow and steady. It's good household names. They're paying dividends or they're not, and people can just feel a little bit more comfortable holding them over time, which is why I like to get into Meta and Amazon and Google. I think they will be players in the AI space in the upcoming year or two, and I think it's just the beginning of what's to come. So to get into it where I believe is a fair price and valuation and compared to its fundamentals, this could be one of those ones that do really well over time. And I think with Meta and now Amazon and Google, there's a couple of others I've been looking at. They're in a good situation. So,
yeah, go ahead.
Question. I was going to say, after this, I've got a new one I'm going to share with people today, but it's not quite where I want it to be, but I'm just going to show you what I've been looking at. If you're, I can't see the chat. So if your audience says yes, I'll be happy to share it.
Honestly, I can't imagine anybody saying no. Remember, it's all information. People take it what you want, take it as an educational piece, informative piece. And I mention this all the time on the program. My guy goes, don't ever buy anything because Merlin says to buy it, Big Eb says to buy it, Tom Barr says to buy it, Larry Jacobson. Don't ever buy it because somebody says to buy it. Do your own homework and say, does this make sense to me and my risk tolerance, right? Typically, my belief system is, and I think this is why I like having Larry on the program, because Larry is not out trying to sell stock picking services. Larry is not out trying to bump his own portfolio. He's sharing information saying, here's what I got. And that's where he and I relate to. I mean, I'll share my trades with you as well. Whereas somebody like Jim Cramer, you have to understand that most likely he's being incentivized to promote and talk about different companies, which he may not really even like. But hey, I get a little perk here if I give you a buy rating on some security. That's a conflict of interest in my opinion. So, do your own research, do your own due diligence. This is not saying to buy whatever company it is he's talking about, but yes, everybody's replying yes so far, Larry. So you've got a clean sweep of yeses.
Good. Well, I'll give you one other piece that you just said, which makes a lot of sense too. One is the stock price in your plan. Mm-hmm. Can you afford to buy 100 shares? If not, then one of the things that I was going to mention back when is if you had 2.5, 3 years in a leap option, then I have 2.5, 3 years to save enough money to then exercise my rights buying that call option and be able to convert that into shares. So had I started here, I'm going to go back just a couple of slides just to show everybody what I'm referring to right here, that let's say I got here to the date of January 18th when the expiration was going to happen. Remember, I have a 30 call that's in force, which gives me the right, but not the obligation to buy the stock at $30 a share. Well, notice the stock got all the way to $199, right? Out here in January 18th. I still could have gone in and only had to pay $3,139 for a stock that now technically would be worth about $20,000. So there's a lot of ways to slice and dice this to give yourself time, and especially with a leap and the idea you got to hold it about 3 years, it gives you the chance to be able to do so. And then this next one, you're going to see this in action, that I'm not ready to pull the trigger yet, but I'm showing you what I'm doing while I'm waiting for the price to get to where I'm interested in buying it. So if we're good, I'll just kind of start sharing it.
Yeah, let's do it.
Okay. So here's the stock right here. Fortinet.
Fortinet, okay. Huh?
Now, this is a software infrastructure company, provides cybersecurity and networking solutions worldwide. This is a really interesting space for me right now because with AI coming and all this new computer technology, I'm more scared. The hairs on the back of my neck stand up more than ever now of hacking in all these issues, especially as you're mentioning, and I agree with you. We're going to start heading to a more digital world.
Mm-hmm.
We better have good security to protect our information, to protect our money. And so it offers hardware and software licensing. They're all about security and network functions, firewalls, intrusion prevention, which is important to me, anti-malware, application control, web filtering, anti-spam. But what I always look at first is it's great in concept, but I think, Merlin, you're going to take a look at this. And I think for the viewers who have been with us for a while, they're going to tend to see next the same pattern that you and I look for and like. Here it is. How many times have you seen this picture when I've shown you a stock that's on the list? Notice that their revenue has continued to grow year over year. Their earnings have gone up year over year. But now I'm starting to look at this by saying every quarter, they didn't just meet expectations. They've continued to do what? Beat expectations, which tells me that they are doing better than even what Wall Street thinks they're doing. And then what I'll do from here is I'll take a look at their cash flow statement. Again, look at their operating cash flow from 2019 to 2022. It's moving in the direction you'd want to see a strong growth company moving.
Just for people who might be new to this, it goes from right to left.
Yep. 2019 to 2022. So we're seeing good growth, and even free cash flow. This company has continued to grow their money that allows them to continue to keep innovating. So this is currently where they are today, even though it's similar to what's going on. I don't have the new annual one since they announced in December. But everything I see here right now really tells me I want to go through my valuation process. I want to see where I might be interested in going. And this is what the chart looks like. Now, I kind of missed my mark. The red line is what I'm interested in, but I'm going to kind of piggyback on your show yesterday, Merlin. Look at this beating expectation record.
Wow.
All right.
So that's better than Tesla's for sure, by far.
Yeah, well, look at this. So I love finding a company that continues to beat earnings like this. Yeah. So if we put this one on your poll, this would have wiped out all the companies you put on yesterday.
And most people have never heard of it.
Never heard of it, right? Now, I don't want to buy all the way up here. My valuations I'm going to give you, actually, which I've never done, Merlin, I'm going to share some of my information.
21 consecutive quarters of beating earnings for Fortinet. That is unbelievable. I don't think I've ever seen that. That's incredible.
Right. And see, it just gets on my radar because I do a lot of scanning on things. And so I want to show everybody that this is not the time to buy it. I'm going to show you why. Now, by the way, I missed it, right? There was right down here, would have been about a month ago, would have been the perfect time in this pullback into this demand area, and then it just took off again. So I've never done this on the show. I am not going to say with 100% certainty that I am an oracle and I know things, but I will share not how I did it, but what my conclusions were. You ready?
Yep, let's do it.
So here are my valuations. This company potentially can continue to grow at its 17.4% year over year. I don't know about you, but anything that's greater than 15% is a killer stock. It's around the 20% that you dream about. So there, through the analysis that I do, anticipating, and this is what you mentioned earlier with Nvidia years ago, that I'm anticipating this stock can get up to $207 a share. And here we are in the 70s right now. Now, their true intrinsic value, if I were to sell this off company piece by piece, all their assets, everything in cash, it should be worth right now about $278 a share. Right now, I'd be interested in 78.69, but I need to see if these zones are going to hold. I like 70 right now. Okay, now why do I like this stock? Strong fundamentals, very strong competitive advantage against its competitors, very strong management. It's got the trifecta that I look for. Now, because I'm not ready to pull the trigger, it doesn't mean I can't start to make money off of it. So I can't see the questions or anything coming in. Is there anything that people are asking, or you want to ask me
Oh,
before I get to the next
there's
slide?
good questions. They're definitely very fundamental, you know. And I guess I'll, instead of saying what are the specific numbers, because Michael's saying what's the debt on Fortnite Fortnite
Yeah, they got very
Fortinet.
low. They got very low debt, which is another thing I really enjoy about it. If you go in and take a look at it, and by the way, you can just go into Yahoo Finance and just take a look at their debt ratio. It's really where it would be. Warren Buffett would say, "I'd want a company not having more than 30% debt to asset ratio." Okay, so I like everything that it's doing right now, but I'm just not at a price I feel comfortable with.
Does PE factor into it at all for you?
It does as part of a calculation, but there's more. And I will tell people where to go if you want to learn more about it. See, because what I'm starting to realize as the markets are doing what they're doing, and we can't ignore the fact that we're heading into supply again that we have not seen since the end of 2021 into 2022.
Right.
One of two things are going to happen. We're either going to retest those highs, which have not been retested now in over a year and a half, or we'll continue to rally. But I can't ignore the fact that we're coming up to an area of supply where the initial selling took place in January. So with that being said, why do I want to rush into something when I can see the broader markets being so much higher in their range that we could see a reversal coming? Why not patiently wait? And I'm going to pull a play out of Merlin's playbook that he loves to do all the time. I know he shares this. So if I'm not interested in doing it now, why not do an option?
There you go.
Well,
Yep.
as you can see, on July 18th, I sold one contract, the equivalent of 100 shares, because I'm interested in owning this stock at $70 a share. It brought in 70 cents a premium. Now, again, I'm just basing this on the fact that it's, to me, a secured, cash secured put would be what I'd be thinking about, because I really want to own it down here. And you can see this really nice pullback into this area here. And that's where I'd be interested in buying it, still within its range of where I'd consider buying it. So I'm going to watch it for a little bit to see what it does. If it comes down to an area here and pulls up, and I really get confidence I think go higher, I might pull it here. But it's a little too high based on what I'm seeing in the broader markets. So that's kind of my little gift. I always like to come with some gifts right now. I'm not telling anyone to do this. It's just me sharing information. Like you said, Merlin, I love helping people understand this better. And so if you want to learn more about it, I've shared this before. One of the things here at Online Trading Academy we've done is we've created a value investing course. Bashir Chaya is an excellent instructor. He really understands the fundamentals. I don't know if some of your listeners are in that class. I think he does a phenomenal job.
Yeah, Bashir's amazing.
Yeah, and his next class is coming up August 15th. So we're less than a month away. We, meaning him and I, spent a lot of time together kind of sharing notes and ideas. And he came up with a document, a worksheet, similar to what I do a little bit differently on my stuff, because I like to have some things that maybe are proprietary to me. But it's a great worksheet to start, where if you're interested in a particular company, and I use this analogy, Merlin, and I know you can relate to it, right? When Lake Mead almost went Deadpool, we saw all the crap on the bottom of the lake,
Yeah,
right?
you literally saw where all the bodies were buried.
It was a handcuff. There was a skeleton handcuffed to a chair,
Crazy,
right? You know,
yeah.
that's where the Vegas folk were taken to and dumped, right? Other than maybe digging holes in the sand. But at this point right now, we might get another opportunity on a pullback off of these retests of these highs. That's where in 2020, I started to look at things again, because you had that drop. If you recall, Warren Buffett was buying when everybody was freaking out back in 2020, because he understands be greedy when others are fearful. And so this is a great class. I highly recommend, if some of you are interested in this, it will give you a great foundation of how to scan for these type of stocks and how to analyze their true intrinsic value, which is this right here. What should the company right now really be trading at? And this leads into, for whatever reason, and you named it, Merlin, if you said to somebody, I'm in Fortinet, people will be like, what's that? I love those type of stocks, right? Because based on what they do, it's going to be needed. And they're clearly in the competitive edge in their industry right now. So if you can't afford to do $70 a share, you might decide to buy a long call And now you have 3 years to hold it to see what it might do. So again, the important thing to understand here is that it's necessary for what needs to be done.
With that Fortinet, I'm looking at the price chart here, and since October of last year, it's gone from $42 and tipped 80 here recently. When you're looking at buying something, does that run up of that big of a magnitude, almost 100%, does that factor into your decision at all? You're like, okay, I have to wait for a pullback, or do you ever get anxious and just say, I'm going to jump and chase it?
It's a great question. Normally, I don't like to chase, but at the same time, back here, it wasn't on my radar. I wish it had been. How cool would it have been right now? We would have had almost 100% winner on this one right now had you caught it. These are some of the things that you can do your best to find things. I don't recommend you need to have a portfolio with 20, 30 things. I just do that to kind of build my skill along the way, that I'm picking things that continue to prove my rules are working.
Well, you're also with a much bigger long-term objective. So having a bigger portfolio is fine. You want to do it to actually to hedge some of your risk.
Correct. Absolutely. And so I just have found that if it pulls back to an area where we had this initial breakout the last time, there could still be orders, and maybe it's going to be down here. Maybe I'm okay getting in at 70, even though it might want to retest down here. I'm okay with that because I'm just expecting things to bounce, and there's a reason to do so. We've had a large run up right now. And again, if I'm looking at the broader market, S&P, I'm seeing us go right up into supply. Then I don't want to be chasing something north when I believe there could be the opportunity that the markets will readjust themselves. And by definition, some of the stocks will too. Now, these better stocks tend to fare better. So at this point, all I can go off of is what I know. And then to your point, can I make enough money here if I bought it at 78 to get to 207? Can I at least double my money? And here it looks like we're almost going to get a 300% rally if it were to get to its future valuation. The only problem is I don't know how long it's going to take, nor do I care.
Right.
Because all I'm looking at right now is, for whatever reason, this company is doing incredibly well in terms of meeting its objectives. It's meeting its earnings. And that's a company that I know I want to be an owner in. I just have to pick the fair price that I'd be willing to buy it at.
Michael says, not to be picky, but leaps only go out to 2025. It depends on the security. Some will go out longer than that.
Well, even if that's the case, you're going out a year and a half, you got a year and a half to buy it. See, that's the difference that what I'm talking about with the option is, if I can't come up with that cash immediately, I can buy a call option that might be much cheaper. And then I can start saving up, and I can exercise anytime I want into the stock once I can afford to buy out the 100 shares.
Earnings. You got earnings on the 3rd of August. Does that factor in? I mean, like, you're out there selling, so you're selling some puts right now, cash secured puts to buy it. Typically the closer you get to earnings, the more expensive the premium becomes, which means more reward for you if you hold out.
Yeah, I mean, I'm going to let go buy earnings. I hope that the earnings are positive and then it drops, which will be great. Notice its history. Sometimes it's dropped. Sometimes it's rallied around earnings. So this would be a great opportunity off the earnings announcement for this to pull back maybe to an area that I'm interested in. So you can see right here going in, boom. We had it here, boom. We had it here, boom. So this has a tendency to pull back, which is another thing that I do pay attention to. So that's why I'm kind of waiting to see what happens with earnings, which will be coming out here. And if it beats again and they have a nice pullback, this might get the opportunity to jump in. And if I'm off by a couple of dollars, I can live with that.
Right.
Versus being right here. It's pretty wide gap between where I'd be interested in buying and where price is right now.
Over 10%. Yeah.
Exactly. Can I show a couple of more things before we're done? I can't.
How much time we got? Yeah, I like to what we're getting. You're making it a long show. I got 16 minutes left. I can't do an hour show. Real quick, Les said, who are the competitors? Big Eb, you're right. Palo Alto Networks is one of their competitors. Also, Zscaler, I think, is another good one. As far as competitors. Steven says, can I stream in 1080p? I did in the early days doing this show, but what happened is it creates bandwidth issues, not on my end, but on the viewer's end sometimes with 1080. So I went with 720. I know I don't look as charming in 720 as I do in 1080, right? I'm trying to do what's best for the end user overall, and some people can't stream that kind of bandwidth, although there is an adjuster that happens automatically. Maybe I will try to reset it here in the future, but bunch of other things on the plate right now.
So no, you know what? Let's just plan. I'll pick another time with you. I'll come back and share another idea that I've been kind of really working on. I've been really into the Ray Dalio stuff lately, understanding if there's going to be a major correction, what do I need to be focused on? So no, I just wanted to come on. I figured, if we're going to take some scores here, and I'm glad the one student decided on their own they wanted to take the investment right now. And again, feel free to trade this. You don't have to necessarily invest it, but I'm always looking for opportunities to get in at a fair price that I believe have the potential to, at worst case, get back to where it should be parity to its intrinsic value, and then be able to benefit by just an increase in price there, and then decide, do I want to keep it or do I want to continue to invest in it?
Well, and I like how you sprinkled in the options side of things as well, because you're right. If it may be at a price, or any security really, and I do this a majority of the time when I'm looking to buy something. I don't want to pay this price. I'd rather buy it cheaper. Which is, and by the way, someone asked me about my Tesla puts. I'm still holding those. It was down huge today, but that's fine. I'm not worried. I've got until tomorrow. Let's see, what is Tesla currently at? TSLA. Here's your Tesla chart. It was down almost 10% today. It fell $28. If it falls another $22.90 by tomorrow, I will own Tesla, and I am actually totally fine with owning Tesla at $240. I'm good with that. Again, I collected $2 and I think 45 cents worth of premium on those options, so that was fine to me.
And that's an important point you're making, is when you're trading options, especially when you're doing these type of trades.
I'm gonna put your camera back on, Larry.
Okay, perfect. I'm going to stop sharing that.
Okay.
So when we talk about right now selling puts, understand that, yes, and the same thing I talk about covered calls, if I can just make these two quick points, Merlin, as I know we're getting late, is if you're going to sell cash secured puts, do so because you want to buy the stock. Right. Some of you are doing it as pure trading opportunities, which is fine. But I know Merlin, that if Merlin's going to do this, he's fine owning the stock. And the flip side of that is the strategy of covered calls. And I will adamantly say to my students, Merlin, unless you are willing to give up that stock, do not do covered call strategies. Because students do it thinking, oh, it's great, I'm going to collect premium while I wait. And then when it gets up to the target, the strike price for the covered call, they don't want to sell it. And what they do is they wind up closing out that short call for more than what they've collected. They actually turn a potential winning idea into a losing strategy. So those would be my 2 points. As if you're going to sell cash secured puts, which is more of a buy and hold strategy, and covered calls, just understand when you commit to that, commit to it.
Yeah. And it's funny because I've talked about with the viewers about a bunch on this, like SLV. I want to hold SLV long term, but I'm also selling those calls against almost all my long-term positions, because I'm going to get that extra 1%, maybe an extra 0.5%, and I'll sell it at a level that, okay, fine. I didn't want to get out, but I'm fine to let it go just so I know I earned that extra interest. So I'm going to lose most of my silver here coming up on Friday. So
yeah, it's a great strategy, but understand, if you're going to commit to a strategy like that, you have to be willing to sell the stock. Otherwise, you're just playing a game that eventually you're going to get caught in.
Yep. Teaching schedule. What do you got on your plate here, so our viewers can maybe take some classes with you and learn from you in person?
Okay, well, so I'm going to be doing an online options class. I think it's the third week of August. So if you have your calendars, you can go ahead and sign up for that. Obviously, I like to pepper in some of my own little tricks of the trade while I'm teaching the options class. Other than that, I'm going to be continuing to host certain events. My focus class has been going strong. It's hard to believe it's been over 2 years now, and love it. Love getting students in there and teaching them how to trade short-term options for weekly income. And so that has been kind of my weekly love and passion, is getting in, and Saturdays with a group of students and kind of going over trading ideas in real time on a week-to-week basis.
Nice. Like it. And you do so much online. I appreciate all that you do for the community of Online Trade Academy. So thank you for all that you do. And lunch tomorrow.
We'll be there. Absolutely.
All right, everybody. Larry, thank you so much. I appreciate it, and I look forward to seeing you tomorrow.
Take care, everybody. Great to see you.
Take care. That was Dr. Larry Jacobson. Give us little insights into, I guess, a trading review. I thought it would be nice to have him go through and explain what are some of the things he was looking at. And, that end test was an interesting one. I'm glad some of you jumped on that and done well with that. That's great. The Nvidia one, that's just, He loves bringing it up because when it went from 30 to 60, I was like, "Are you gonna get out, man? I made 100%. I'm done. I'm out." And he's the long-term approach, keeps you in there longer and says, "Let's get thousands of percent rate of return." I just know that's a style that personally is not for me. I don't have the patience to sit there for years. I almost feel like a hypocrite saying that because my crypto portfolio, I don't even worry about fluctuations. I'm just looking to add to it when I see big pullbacks in the market. So I guess in one sense, I am open to the long-term investment side of things. But I have a challenge with equities. Just so much can change over time in management and products and moods and social norms. It's tough for me with stocks. So I guess I do hold long-term without really looking at the price, and that's going to be with crypto. But the other stuff, I can't do it. I can't do it with stocks. But good for you if you can. All right, let me run through our top 8 markets here today. Hell of a day. I had a great day shorting the triple Qs and NASDAQ futures. We had a great down move. Just kept going and going and going. It's crazy. Here's your NASDAQ down 2.3%. You notice we had that shooting star on the futures at the end of the day yesterday, which gave me a little bit of negativity. I've been expecting a pullback, and unfortunately I caught a good portion of this move closing out right near the end of the day, so I'm out of my shorts. But as a day trade, on heck of a rate of return. NASDAQ down 2.3%, Bitcoin down 1.13%, slowly creeping lower. I've told you, I'm not happy here. That 29,740 mark is where that red line is at, and we've been teetering over and above that one for the past couple of days now. Not looking so good right now. Russell 2000 down 0.86%, a big engulfing pattern there for the Russell. S&P was down 0.69%, a similar pattern to the NASDAQ, although it's not quite the shooting star that you saw with the NASDAQ. Gold down 0.5%. Now SLV, which all eyes are on that one from, SLV. Silver had a pretty big sell-off today, down 1.82%. I have a bulk of my position at the $22 strike, so I'm going to lose most of my, well, at least it's half my silver is going to disappear there. I have some 22.50 calls that I sold against my position, so I'm hoping tomorrow it drops another 18 cents, gets below that 22.50 mark, so I can keep my silver and sell calls higher at 24 like I did for some other portion of my silver portfolio, and I sold some calls at 24 bucks. So gold down 0.5%. You had the 10-year today with a big surge to the upside here. A nice surge up for that 10-year. Of course, that's putting pressure on these markets. We'll get to the dollar in a minute, which is your best. Crazy, the dollar is your best performer today. Decor of educational organization. Okay. Crude oil, 0.48% to the upside, coming right back up. We'll see how long this pullback lasted. I thought maybe we'd see a bigger drop here, but deeper pullback. I thought we'd get down to this area of consolidation right around 73.50. We were just a few cents away from that, and a little bit of an up move today, but really, at the end of the day, indecision, because you had a small real body, which fits inside yesterday's candle, and topping bottoming tails on crude oil. Best performer, the dollar. We've had 3 days in a row of nice gains on that dollar index. The question is, where does it go from here? That 100 mark that it's kind of hitting right now, literally at it at this exact moment, looks like a logical pullback. And if that does hold, we should see it start to sell off over the next couple days. But given the way that the market's finished, very weak going into the close, makes me feel like that dollar index is actually going to keep going higher from here. Existing home sales were terrible. I didn't look at the fundamental data, but since Big Eb did, let's go. I got a couple minutes left. Here is your existing home sales for today. They were expecting it to fall from 4.3 million to 4.21 million. Came out at 4.16 million. And when we look at the big picture here, here's your chart of it. We have been consistently sliding lower. And again, I believe a lot of that has to do with mortgage rates surging. And as that 10-year keeps moving up, you'll see those 30-year fixed rate mortgage moves up, and then I think that will have an impact on existing home sales. Now, I'm going to zoom way out here just to give you a sense as to what historical norms are. We're relatively low compared to the average that you've seen for the past 16, 17 years, which looks to me like it'd be right around in here's actually probably somewhere around here, like 4.75 million, maybe 5 million. All right, you can see that I'm trying to draw a horizontal line where the average looks like it could be. Let's see, what else do I have here? That was the one economic analysis for today. Also, the Philly Fed Manufacturing Index came out, which was disappointing as well. They were expecting it to get better. It actually got slightly worse, so not good there. And again, I was making the point that 15% of GDP comes from manufacturing. This is not good. All right, other pieces for tomorrow. Let's scroll down here to our bottom. You notice we got nothing cooking for tomorrow. You have retail sales for Canada, and that's pretty much it. On the earnings front, for those who want to look at earnings, I didn't bring up the earnings calendar yet, but I will do that for you right now. We had a few companies reporting earnings today. These are them, Johnson, and again, lots of beats, right? Everybody on this screen right here beat. You had Nokia beat, you had Philip Morris beat, you had Philip Morris beat, American Airlines, Abbott Labs, Intuitive Surgical, Blackstone Group, and Johnson & Johnson all beat. Nokia did not. No real surprise there. And Freeport-McMoRan, which is one of my favorite silver royalty companies, beat by 7 cents as well. So that's pretty much it. What about Conagra Brands, which just reported earnings? What about it? We can go look at CAG. I like Conagra Brands. I think long term they're probably going to do relatively well. But technically, they look like garbage right now. If you look at that price chart since December of 2022, which gone from over 41 bucks down to 32, doesn't look good. And Michael, you also mentioned a couple other ticker symbols, which you've asked me a few times about, and I'm going to say the exact same thing I did last time, which was your AMBP. Here's AMBP. You like to cling on to stocks that you know, and while they may make cans for the beverage industry, everybody needs cans. Look at the chart. This chart right now has done nothing since March. You've gone nowhere. You're really just traversing sideways. So this is something that I would want nothing to do with. Zero. Now, what I would do is I would do what we call the Tom Bar box on this show, and I'll draw a box where I see price kind of being stuck in between, and it might look something like that. It's not really that great of a box, actually. It feels like more compression than this, but that box goes between $3.31 up to $4.13, and until it breaks above those highs at $4.13, stay out. Personally, I would probably go a little bit lower. I think that you might get away with, say, the $4 mark, but why bother buying this thing? It's doing nothing. Would you want to go surf in a flat ocean with no waves? No. Why would you do it? So I think you'd waste your time by being in this one. There's way more companies that may have better opportunity. And again, I don't care about the dividend. I don't care about the price. I care about what is price doing. And in this case, it's just going sideways. So snooze fest, yawn, boring. I wouldn't touch it with a 10-foot pole until it gives me proof to buy into it. All right, that's going to do it for me. I'm going to take these earplugs out of my, been getting upgraded to $6 the other day. Again, watch the show I did. Go back, Michael, and look at the show I did on upgrades and downgrades. Upgrades and downgrades are a scam. An upgrade is trying to get people to buy it. So this is manipulation done by analysts. So if they issue an upgrade, they're probably out there selling it. I watched it when I was losing level 2 screen back in the 90s. All day long. If Goldman Sachs upgraded Apple, they were the ones selling Apple shares at a higher price. If JP Morgan downgraded Microsoft, JP Morgan was the one buying Microsoft that day at a lower price because they're using those upgrades and downgrades to manipulate you. So you really should just forget about upgrades and downgrades because it is a manipulation tool used by the industry to get you to buy and sell securities. So yeah, upgrades and downgrades, total con. Okay, time-wise, I got 2 minutes. That's going to do it for me. I hope you enjoyed Larry Jacobson's presentation today. If you want to know more about Larry or take some courses with him, you can go to tradingacademy.com. That's Online Trading Academy's website out there, and they've got everything from stocks, options, futures, forex, cryptocurrencies, real estate, you name it. They got just about a little bit of everything there if you'd like to learn more. Tomorrow is Friday. I had a couple questions on General Electric, which is an interesting one. So I will definitely go through the GE question tomorrow. Sorry I didn't get to it today. Also, I guess we'll have the conclusion of the Tesla trade, my silver trades, etc. So for those of you who are watching the program and would like something specifically covered tomorrow, email me, TraderMerlin@gmail.com, or go out to the YouTube channel and put something down there that you'd like to hear, or comments, feedback, whatever. I always love it when it's on the YouTube videos. I didn't get a chance to check them today because I was so damn busy, but I'll incorporate all the comments you guys put in yesterday and tonight into tomorrow's show. That will do it for me for today. Hope you guys have a fantastic remainder of your day. I will see you tomorrow. Take care.